36th meeting of the Committee for Finance in the 22 to 27 mandate. As always, members, the committee meeting will be recorded and broadcast throughout Parliament buildings and online. You are welcome to use mobile devices, but please keep them silent or in airplane mode. It's not permitted to take photographs at any time. Agenda item 1 is apologies. We've apologies, late apologies from Deirdre Hargey, who will be running a little late, and we have several members who are joining us on Zoom, including Deirdre, Steve Aiken, Jerry Carroll and Nicola Brogan. Agenda item 2 is declaration of interest. Do any members have any interests they wish to declare? No. Okay. Item 3 is chairperson's business. The first item of business is to welcome Niall McNary, who is joining us on Work Experience. Welcome, Niall, and I hope it's compelling enough to keep you watching after you're no longer doing Work Experience with us. So the next agenda item, members, is relates to the impact of national insurance. You may be aware of the rise and the consequential impact on the public sector here. You may be aware of a written statement by Baroness Taylor of Stevenage in the House of Lords earlier this week. It indicated that allocations worth £520 million to councils in England, with a separate 13 million allocated to the combined authorities. And that written statement also indicates that there will be Barnett consequentials for the devolved administrations. You will also be aware of comments by the now former Finance Minister over the weekend indicating that the funding provided by the UK Treasury will leave the executive, by which I think she means I'm not sure if she means specifically, I think it's the executive rather than all of the public sector, or does it include councils?
We think we're not entirely sure, we've asked for that clarification, but we think it's just the core departments.
We think it's just the core departments, but there's also an important thing we need to get clarity on, which is the situation that other parts of the public sector, particularly councils, who are obviously this week voting to strike a rate. So urgent clarity. Sorry?
I made a political point and said or against.
Or against, indeed. Well, yes, fair enough. Urgent clarity was sought from the DALO on whether there would be any Barnett consequentials or what the quantum of the Barnett consequentials will be, and if so, whether they are ring-fenced or unhypothecated. I think we have the answers to whether they're hypothecated or not from Hilary Bain yesterday, who said that that the executive would not be compelled to give them to councils. But we also obviously need clarity on the 100 million figure quoted by the minister, and what that actually means. At the minute, we have various statements. We have kind of disembodied numbers which relate at different times to the executive, the wider public sector, and then beyond that, public service private and voluntary sector bodies that deliver public services. Those are effectively 3 different numbers, and then there's a separate number which is the Barnett consequential that is being there's a Barnett consequential to the executive from the money to local authorities, and there is also an amount of money which is being allocated to cover the national insurance rise for devolved government. We need to know all those numbers, I think, and we don't have them at the minute. So if members are content, I would like us to get an urgent. I think we've already asked for it.
We have,
but
Chair.
We assuming that members would be content for us asking for that, I'm really keen that we chase. If people are content, does anybody have anything to say about this? Or wants to add anything?
I think you make the point, Chair. We have requested this on a number of occasions. We've had public statements by ministers, some of which contradict the previous statements made by their outgoing or previous minister. How difficult can it be to give us we still don't know any of the 3 figures that you mentioned, so I'm not sure of the difficulty in getting those is.
I think this really shouldn't be that difficult to calculate. The executive should be able to say that it is receiving whether it's £3 or £4 million as a Barnett consequential from the 500 million, effectively the 500 odd million that the Treasury is giving to local authorities in England. I don't know what that number is exactly, but it will be a few £1,000,000. If they have made a decision that is not being directly given to local authorities, we need to understand why and why they're making that decision. Because at the minute, local representatives are being asked to vote to increase district rates by different amounts on the basis of a national insurance pressure, and representatives will understandably not want to be in a situation where their council cannot meet those costs, but they also deserve, if the executive has the information, they should be given it ASAP. So if members are content, I think we should, with the greatest of emphasis, ask for that, ideally within hours rather than next week's
The
meeting.
request went in asking for it before the meeting so members could be informed for the meeting. What we will do, as soon as we get it, we'll put it out to members so that you're not having to wait for it, and then we'll bring it back in the next committee as well once we've got it.
It was, like, I remember this first came up in the committee, obviously before Christmas, we were talking about it, and the department had estimates, and this is the Department of Finance, they know what the pressures are, and they will, one thing these organisations know is what their payroll is, and it's a relatively straightforward calculation, I would imagine, to be able to calculate an increase in employer NIC contributions. If we're content, we'll get that information or ask for it. Deputy Chair, want to come in?
Yeah, thank you, Chair. And just to follow on from what you've said, the total amount of the pressures was never confirmed from Department of Finance for us. Some of us were piecing it together ourselves. It was agreed that it was over 200 million, but the specifics were never confirmed. And pardon me, and the offer made or the calculation of what Barnet would be has never been furnished to this committee. And if the Department of Finance have it, I feel like it should be shared, especially whenever the Minister's making public statements saying it's 100 million short. Because if it's 100 million short and the pressures were 200 million, we've only got half of what would be the shortfall, where Scotland got 3/5. So I just think it's so important that we get the numbers whenever they're floating about in the public domain.
Yeah, I think that's really important. So if members are content, we will chase that. Like, I think we are now in a situation where even if the department feels they are still haggling with the Treasury, there's still information, I think we need to understand exactly where that is and what specific information they're waiting on, because councils are waiting on information from the Department of Finance while voting through rates. I think it's completely an untenable situation.
Sure, if I could add, we're looking at the 25-26 budget, and the pressures into that. We've been asked to consider accelerated passage for a budget bill, that if we don't know what the contribution is going to be to the increased national insurance, we don't know should departments be looking at cuts to their budgets for the incoming year, so we need to know.
Yeah, including the regional rate, which is included in the budget. Okay, we need that information ASAP. Okay, members, the next agenda item is a piece of correspondence relating to a Bank of Ireland investment announcement, which actually came into my NLA inbox that we shared with members. I'm sure some others probably got it. It was around an investment from Bank of Ireland. Now, the reason we think it's important is that we obviously hope to hear, I'm not PRing any particular investment announcement by any particular bank, but I want to use it as an example of why we need to hear from these banks and talk to them about and ask them questions about their service offer in Northern Ireland. Members are content? It's just really to flag, that's to note at this point. The next agenda item is the new Minister of Finance, which, breaking news, I think people should already be aware there is a new Minister of Finance. He has written to us just earlier on today to say that to introduce himself. He needs no introduction, and we will be seeking an early meeting with him and seeking to confirm with him that he'll be attending the Inter-Parliamentary Finance Committee Forum on Wednesday, the 19th of March, when we are due to host Scottish and Welsh counterparts here. So, members, that is to note at this point, and I think I've put on the record the committee's welcome to the Finance Minister, and hope that he obviously will continue the constructive work, even where there are differences or emphasis, or we have to do our job in terms of scrutiny. We welcome the new Finance Minister to his post. And we write to him to that effect.
Chair, I was just going to ask if members are content that we write, responding to his letter welcoming him and confirming that date in the diary of the 19th with the time slot that the previous Minister had agreed to, just to ensure that it's very much front and centre, if members are content to do that, Chair. Yes,
so if members are content, then the next agenda item relates to something else that was emailed to you today, which was correspondence from to me from the Secretary of State, who is effectively saying thanks, but no thanks, in terms of his appearance or his official's appearance. He has largely directed that back to the NI Affairs Committee. Now, we can have a longer discussion on it next week, because obviously we're continuing work on the PSTB. My initial view would be that we need to note this at this stage. I don't think we're going to get, in the very short term, evidence from the NIO, but I don't think we should let this lie in the nicest possible way. I think we should look for opportunities to revisit this, but I think I suggest we might benefit from perhaps a longer discussion on it next week.
Chair, it'll be in next week's pack. This was making sure members had it just as it came in, so people can table a discussion.
Can digest it. The email came in, which should be in your inbox at just 1:45, so it's very hot off the presses. But we can have a longer discussion about it next week. Okay. The next agenda item is draft minutes of the meeting we had on the 29th of January, which was obviously at NICVA. If people are content, they're a true reflection. And I'd say thank you again to the clerk staff for all their hard work in making the really positive joint Economy Finance Committee event happen. I certainly learned a lot and found it most useful. And indeed, thank you to the Deputy Chair for stepping in to complete the meeting in the Chair. Members are content. I'll sign the minutes and we'll move on. Content, okay. The next agenda item is, we move on to matters arising. The next item is relates to a supplementary consultation on the strategic rates roadmap. Members, at page 17 of your pack, you will find the Minister's roadmap statement and summary document from the previous rating consultation at page 29. Further to the former Minister's statement on the strategic roadmap for the review of rating policy, Dr Archibald wrote to the committee indicating she would commence a supplementary consultation on elevating the current level of the maximum capital value on domestic properties from 400,000 to 485,000 and on reducing the early payment discount from 4% to 2%. The consultation document begins at page 49 of the meeting pack. It sets out policy proposals, and any proposal for change will go back to the Executive in due course. The consultation opened on the 29th of January and will close 12 weeks from 12 weeks hence, not 10 weeks as stated in the original roadmap statement, and so that means the consultation will close on the 25th of April. So members, this is to note this correspondence at this point. I would just, I guess, again, point out for the record, pardon me, that this is really a consultation on a policy that cannot happen now for another, well, not quite 18 months, but more than a year, because it was not brought to the Executive for discussion. It was heavily publicised in the media, but we are now effectively consulting on a future aspirational ratings change, which the Executive has not yet agreed on. Not that there's anything wrong with that, but members are content to note.
Noted, Chair.
Okay. The next agenda item is a written ministerial statement on cash advance from the Consolidated Fund. The Department of Finance brackets pensions will reach the limit of cash which it can access from the Consolidated Fund. Sorry, this is, I should say, page 67 of the meeting pack, the main pack. And this relates to a potential breach of voted limits by the Department of Finance brackets pensions. So the former minister, I'm going to have to say that a lot today, I imagine. The former finance minister authorised a cash advance up to a maximum of £27 million, which will be repaid once the budget bill 2025 is passed by the Assembly and has received royal assent. The statement was also emailed to members on the 29th of January. My only question is really just a very small clarification, I would hope, is I may be totally wrong, but obviously there's certain types of spending that regularly have to be authorised. Is there a particular reason why this one? If they could give us a one-line explanation just as to what the reason was, or perhaps the...
Well, I think,
you're
Chair,
able to-
it's simply that they have reached that previously voted cash limit.
I suppose the only question is the only reason I'm asking is there a particular reason, and does this speak to something? But if it's a very straightforward, Deputy
Yeah,
Chair.
thank you, Chair. I think that we had raised this as a query before, and we asked for this, that if it's coming through and it's routine and literally just it's the timeline of the cash, we
Yeah.
asked them to add that
Profile of the
commentary.
cash.
So I think that it's fair that the Chair's comments added, even though if we can deduct that from reading it, we have asked as a committee that when it comes through to us, can they tell us is this routine or exceptional?
I think that's literally just a line, really. If we could just ask them for a line to explain
We have asked
how,
for it
how routine
before.
or otherwise it is, and I presume it will be routine. Okay, the next agenda item is the supplementary estimate memorandum. Members, that's page 71 of the meeting pack, and it was also in last week's pack. We agreed to bring it back so members would have time to digest it. The department's provided us a copy of its memorandum for the 24-25 spring supplementary estimates, and this will be incorporated into the spring supplementary estimates document, which is due to be published prior to the spring supplementary estimates resolution on 17th February. The memorandum sets out the main components of the department's final budget for 24-25, shown as resource and capital DEL. A comparison is also provided between 23-24 outturn 24-25 main estimates and 24-25 spring supplementary estimates, with the main causes for change in spending trends over the last 3 years detailed. Table 1.4 on page 75 shows the variances between, on page 75, sorry, shows the variances between the 23-24 final outturn and the 24-25 main estimates and the 24-25 SSEs across resource DEL, capital DEL, resource AME and capital AME. The table highlights significant variances. Variance on net resource DEL was mainly due to an increase in rates rebates and spending increases on Integrate and Nova through monitoring rounds. The capital budget decrease was largely due to asset sales, increasing income and decreased spend on accommodation services and accounting charges. The charts on page 78 show the net spending trends over over 3 financial years. Net resource DEL has increased due to a combination of increased rates, rebate and staff costs and allocations for Integrate and Nova. The decline in net capital DEL was largely due to asset disposals. At page 79, the expenditure of £555,000 for the Fiscal Council, resting on the sole authority of the Budget Act, is highlighted with, quote, unquantifiable contingent liabilities set out on page 80. There are one or two things, and the Deputy Chair wishes to come in, others indicate if they wish to come in on this. A couple of, I suppose, questions for me is just to ask, for the sake of being tidy-minded about it, do the Integrate and Nova, the excess spend, the slightly increased spending on Integrate and Nova, has that got anything to do with, I presume it hasn't, because the PTS, the Public Sector Transformation Board, hasn't made any allocations yet, so even though Integrate and Nova are both being bidded for?
Chair, that was where the department found itself, was it wasn't holding money for those, and they were basically in the process of, I think, being preferential or prioritised bids in the monitoring rounds and when there was funding available. Because these are service-wide systems, it was seen as being a priority spend by the executive coming out of any monitoring rounds and anything that was available through Barnett Consequentials. So that has largely been the way those have been funded over the last financial year and the previous one. Again, because the department's own budget cuts meant that it wasn't able to afford those out of baseline, so they've come from those additional funds.
And I suppose one of the other things is the large variance in relation to capital DEL, which it says is to do with asset disposals. Is that...
So that becomes income?
Yeah, I get that, but I suppose my question is it all that? Is that everything, or is any of that specific project-related underspend or delay?
Not that has been flagged up. Chair,
Yes,
I was going to ask on this as well. Comment and then two questions. The comment being that whilst the Department of Finance's actual spend as a department is quite low compared to others, the percentage change from what was forecast is very significant in terms of the capital DEL, 75% difference. So I do think, is totally right, and you're raising that point. And when you go to page 77 of the pack, the second paragraph there, we're saying the remaining easement, 11.6 million, is mainly due to delays in contracts due to ongoing legal challenge and slippage in projects. I think that we should ask for a little bit more detail around that. It is quite significant, and again, anything to do with legal cases. And again, to go on to page 80 in the pack, you had reference to unquantifiable contingent liabilities. I would ask that we get an update, even if it is in closed session on that. We'd asked about this before. There are 22 public employer liability cases pending here against the department with unquantifiable, and there's one judicial review case pending, and I think that we should be cited in a little bit more detail of those.
I agree. I think it's just really important to get that explanation on the capital side. On the obviously, I was just worth noting. Obviously, the use of the black box to pay for the fiscal council, which still we don't understand when that's finally going to be resolved via primary legislation. Do any other members wish to come in on that? No. Okay. I think if we could seek those particular clarifications on spring supplementary estimates, that would be most helpful. Okay. Next agenda item is the PAC report on child poverty in Northern Ireland. At the meeting on the 22nd of January, members agreed to seek an update from the Department on progress towards implementation of Recommendation 9 on the PAC report on child poverty. This recommendation recommends that the Department works with the departments to review the barriers to use of the Children's Services Cooperation Act Northern Ireland 2015, and by December 2025 produce an action plan to reduce and remove these barriers. The department has indicated that it provided input to guidance on the Act and that it intends to engage with departments and select stakeholders to seek additional information on awareness and barriers to potential use. The intention is to produce an action plan aligned to the multi-year budget process. The department also intends to use the Department of Education report on the operation of the Act to further inform the development of this action plan. The only thing I would note about that is the happy use of a multi-year budget process, and the fact that they are working towards a multi-year budget process, which at the minute so far as I can ascertain from recent evidence we've had, the multi-year budget will be 2-year, because that will align with what the Treasury is going to provide later this year. But there is, in parallel, 5-year departmental plans, which I certainly on an individual level have encouraged or suggested the department could turn into at least hypothetical or indicative budget exercises. I think it would be helpful for us to ask if the 5-year plans are being, if the 5-year planning, if people are doing this on the same basis as some of the 5-year plans that we are told that the departments are working towards. Does that make sense?
Yeah, Chair, from what we've had, the clarification we've had has been that the department will attempt to provide a baseline budget accompanying those 5-year development plans. It'll not include anything that's going to be new, but it at least gives an idea of how baseline will grow. But we can seek more clarification on what exactly the plans are. It's been a little bit concept so far. Deputy Chair.
Deputy Chair.
Yeah, thank you. And just to declare the interest that I also sit on the Public Accounts Committee, I'm just a little bit concerned that there's a recommendation that the Department of Finance picks up this on the progression of this Cooperation Act, and they're saying their intention is to produce an action plan aligned to the multi-year budget, which we know won't be until next year. So I would ask, is the department, are they taking action this year or any sooner, or what exactly the target date for any sort of progress or implementation is in this? Because I wouldn't want to see it set until next year with both hats on.
Great. Indeed, yeah. We've lots of conversations about how wearing multiple hats, whether that's possible. I would also say, but and we're sort of being quite saggy here in terms of what we're asking for, but as well as the points that Diane raised in the multi-year budget bit, I think there's also a question about the anti-poverty strategy and whether this work, because the Communities Minister is talking about that we're going to at some point get an anti-poverty strategy. I presume this all ties in with that, and that has to be part of the this work on the Children's Services Cooperation Act has to feed into the anti-poverty strategy. So I presume they can confirm that that's happening. Okay. Yes. Okay, members, we need to get agreement to that we're going to get that update, that we've had that update, and we're going to get a further briefing from the department following engagement with stakeholders, and we will ask for the bits of information that we have agreed on, and we will share that information with the communities, education and public accounts committees. Okay? So next agenda item is from the Committee for Communities, and it relates to something we've already discussed, which is the impact of national insurance contributions on the community and voluntary sector. That's at page 116 of your meeting pack, members. The committee has been copied into correspondence from the Communities Committee to the former Minister of Finance regarding the cost of doing business research being undertaken by Gareth Hetherington. The Communities Committee has requested a copy of that research once it has been published. Members, that is to note this at this stage. I think it's also worth saying at this stage, we had a debate yesterday brought by Mr. Brett on the nighttime economy in Belfast, and I, on a personal basis, used that opportunity to ask the former Minister of Finance, now Minister of the Economy, to confirm that the terms of reference are not totally explicit on this, but that the rates, i.e. the regional district rate, will be included as something that is being looked at by the cost of doing business. We've got that. Okay, that's later on. Okay, apologies. I'm jumping ahead. Jumping ahead of my own agenda. We can note that correspondence from the Communities Committee. So, members, the next agenda item is 5.6, and it relates to the banking and financial services landscape inquiry, the Fair Banking Act. That's at page 119 of the meeting pack. So. Now, these papers have been sent to the committee via Development Trusts NI. It's a 3-page briefing paper outlining why a Fair Banking Act is needed for Northern Ireland, and a research paper on the impact a Fair Banking Act could have. They have been produced by the Finance Innovation Lab, and these papers highlight the case for how, as part of a UK financial inclusion strategy, a Fair Banking Act would resolve the problem of access to affordable credit for individuals, SMEs and social enterprises. The lab will be working with the Development Trusts NI going forward to set up a lived experience group to inform the next stage of the work, which is likely to be in North Belfast. Members, if people are content, we will include these papers as part of our evidence base for the committee's inquiry. Content. The next agenda item is the Dallow readout extract of requests we made at our meeting on the 15th of January. That is tabled in the tabled pack. It's in the main pack, and then some of the responses are in the tabled pack. So the first one is the Dallow readout response and gender responsive budgeting, which is at page 5 of the tabled pack. The committee previously asked the department for information on what work was being progressed in relation to gender budgeting. Officials have indicated that they continue to progress work on gender budgeting as part of the budget improvement plan, including engaging with Ulster University academics and the department's work on the cumulative equality impact assessment completed as part of the draft 25-26 budget. Officials also intend to provide gender budgeting toolkit materials to departments to help them consider policy formulation in the 25-26 financial year. Members, we have also commissioned work on this from RAISE. That is to note this update, unless anybody wishes to say anything more. No. Okay. It is important to say that the former finance minister, I think, effectively voted to embrace this work, as I think was quite crisply noted by Mr. Brett in that debate. So obviously we would hope that the department is keeping that work up, having the minister having endorsed it by voting for it in the chamber. Okay, that's to note. The next readout response is in relation to cost of doing business. The cost of doing business report that we just discussed, and that's page 6 of the tabled pack. The committee previously asked the department for further information in relation to the cost of doing business in Northern Ireland research. The department has provided a copy of the terms of reference for the research, indicating that it will cover a broad range of factors, including the impact of the recent announcements on employer national insurance, as well as other contributing factors, including wage costs, I would hope, insurance, property, energy costs, and the property costs element is expected to include businesses' annual rates liability. However, there is little detail on this, considering it was raised as a significant issue by stakeholders at the committee's joint event on the Economy with the Economy Committee last week that we've just discussed. So it also highlighted that DFE officials, this is in the DALO response, highlighted that DFE officials are part of the department steering group for the research. I'm just going to make a point here, which I think is quite important. There is, in the terms of reference, I'm just looking over the clerk's shoulder, there is the only mention of rates in the terms of reference is property, i.e. property costs, brackets, including rates. I think it's really important that it includes rates, and that part of that reason is because I think we will look a bit preposterous if the Devolved Administration Commission's research on the cost of doing business and does not include the only area of revenue that it has control over. I think people will think, particularly when it's being commissioned by, with the greatest respect, a very eminent and respected economic policy think tank, but an economic policy think tank that regularly advises the executive, and they will, the public, and I think particularly small business holders, will want to know that it's being looked at as independently and rigorously as possible, including the impact of rates. Just put that on the record if anybody wishes to come in. Philip Brett.
Thank you, Chair. This research was, announced by the Minister at the time of whenever there was the rightful pressure from business organisations on the issue of rates following the decision in other parts of the United Kingdom to lower rates, particularly for hospitality and for small retail. So to not have it in the explicit terms of reference of the research that was meant to placate the representations that she was receiving is utter madness. It's the single biggest issue that businesses believe can be used. It's the most blunt but quickest thing that can be done by us as an Assembly and Executive. So I think it would be important, Chair, that we as a committee made clear to the Department that it is our clear view that this should be an important part of the terms of reference.
I completely agree, and I particularly think that's the case whenever we had that joint event last week and people talked about the impact of rates. It is not simply the case that there is a one-way street on rates. Clearly there are other things that could be done, even in a revenue neutral way, in terms of reflecting pressures on the high street versus other areas. So I think it's really important that it includes rates. I think we will look preposterous collectively. Certainly the department will if it's not done. Deputy Chair.
Yeah, thank you, Chair. And I don't see any reference to our local councils in this terms of reference either, because obviously there'll be different disparities in obviously city-based and more rural council areas. I think that there will be different cost of doing business issues in each of those areas, and I don't know if we could suggest that the terms of reference
I think that's
could
really important.
consider reflecting regional balance and local councils who are the ones that are out front facing of the rates.
I think that's definitely important. Yeah, I think that's, given the rurality issues, that's definitely very important. I don't think it's going to be this. It's very, very important that this report is seen to be something credible and robust that makes, that yes, sets out the cost of doing business, but isn't just an answer to a question from, isn't just a way of saying at the time we're doing something, we're commissioning some research. It has to come forward with actual potential policy solutions, even if those policy solutions are difficult or a minister feels they can't proceed with them. I think it's reasonable. Certainly small business owners have a right to expect something properly robust. Obviously it will look at the cost pressures that are created by decisions made in London, but I think if it just ignored the devolved or council context, it would look, I think it frankly would look ridiculous. So I think those points are well made. So we'd hope to hear back from the department to reassure us on all those points. Right. Okay, members, the next agenda item is, or the next DALO readout response is on the audit trail for property disposals. We recently considered information from the department in relation to disposal of certain public sector properties. Netherley House was one of them, but we asked for more information in relation to Cookstown Social Security Office. The committee asked the department for information on, quote, the witnessed random selection process and offers under market value. So the department has provided us with further information to the on the guidance that is applied when there is competing prospective purchaser interest within the internal market pathway, and they indicated that the asset owner considered random selection to be the most expedient means to deliver on its requirements. The department indicates that LPS also engages with the selling agent to determine which offer is the optimum and whether this amounts to the best priced, reasonably obtainable within the context of the market at that particular time. If an analysis by a if the analysis of a disposal by the selling agent in consultation with the LPS determines that the optimum bid is not at a level considered to be the best price obtainable, LPS will not recommend it for acceptance and instead will recommend alternative options to the asset owner, which may include extension to the marketing period, a change of marketing strategy, an alternative method, or other changes. So if anybody wishes to come in, Deputy Chair, yep.
I'm still not very comfortable with this, witness random selection process, and the reason given for it was expedience. What about fairness or value here? Was it DTNI that it had referred to in this one that we'd discussed bringing in, or?
So do you remember who DTNI are?
Development Trust.
Yeah, I think they
We
were
have them
referenced as
in,
part of that process.
next week.
Or if it was LPS, but just as a follow-up to this, if we're disposing of public sector assets with two very credible organisations put their names forward at what the suggested value was, and just random selection, just
Wonder,
Yeah.
because this is an unusual thing. It's not something that most people will ever have heard of. It's perhaps worth actually getting
how
briefing
widespread
on
is
this,
it? I'm
because
just quite surprised that it would just be disposed of in this particular way.
Chair, would it be useful to actually get officials in? Because then I think interactive oral briefing may well be the only way to get to the bottom of what this is actually all about. Because we could probably exchange letters and so on for a long
Chair,
time.
if just to read that point out again, on that particular disposal in Cookstown, said neither interested party held an advantage over the other, so the asset owner considered random selection to be the most expedient means to deliver on the requirements. So just, there is a criteria that we are assured.
Okay. Well,
Fairness.
why don't we just? Yeah, that I think that's fine that we
briefing.
Yeah.
that we
Members are content then?
pretend that we'll do that.
We'll do that.
Okay.
We're going to get to the bottom.
Yeah, that's great. Thank you. The next agenda item relates to the NI Investment Fund and CBRE. So, members, page 12 of the meeting pack. The committee previously asked the department for further information in relation to CBRE, which manages the NI Investment Fund. The department has outlined CBRE's responsibilities in making investment decisions, indicating that there are a range of other requirements for CBRE which are set out in the operational agreement, quoting examples. The department also highlights that the performance of CBRE is monitored on an ongoing basis by the Scrutiny Board and required to the CBRE are required to provide information on a quarterly basis to that board. The board provides information to the SRO for the fund, the Department of Finance Permanent Secretary, in a range of different ways. The department also highlights that the appointment of CBRE followed a competitive procurement process. The fee structure considered the tender put forward by CBRE at the time, which would have been considered against other bids received. Obviously, I don't think we have that information about whether there were other bids received or whether, and I think it would be, first of all, helpful to find out whether anybody else bid for this contract other than CBRE. The CBRE contract is 15 years from the effective date, which was November 2017, and expires in 2032. 4 external gateway reviews have been completed. The last one was carried out in January 2021, which aimed to quality assure the investment fund governance arrangements. So, members, there's a couple of points. I think we need to continue to investigate the Northern Ireland investment fund. When I say investigate, I don't mean that to give an indication there's anything malign or suspicious about it, but really to understand whether it is doing what the public kind of were led to believe it was supposed to be doing. And one of the things it was supposed to be doing, or among the things it was supposed to be doing, were looking at target sectors to basically provide funding for via the Department of Finance using FTC for a range of target sectors, which included, and I just read from the list, office, industrial, warehousing, logistics, R&D, hotel, leisure and residential. There are plenty of those. Other capital investment projects, non-domestic, domestic energy efficiency projects, energy generation, including photovoltaic, wind, hydro, waste, heat network, circular economy projects, and those are the main ones listed. However, most of what has been delivered thus far are hotels or apart hotels. So I think it's important that we understand as much as we can, the context for CBRE and the commercial incentives that are at play for them. That's not to say that they aren't doing the job within the legal parameters they've been set out. I presume they are, because all these monies have been dispersed and these projects have gone ahead. But I think it's important for us to understand this money is being best used, and particularly given we want to see more FTC deployed, but also deployed ambitiously. So just wanted to bring in the Deputy Chair and obviously anybody else who wishes to come in.
Thank you, Chair. And it's one of these where it's an extremely long contract, and surely there are some inbuilt periods of review. Page 14 of the table pack, where it's talking about it's from 2017 for 15 years. It said the first review period was 6 months from the effective date, but it doesn't say when else this contract's being reviewed. It's referencing gateway reviews, but they seem very much about the governance. But how often is the actual contract and how effective it is for Department of Finance, for the executive, and just the general plans, how often does that occur? We also see them referring to the setting of the fee, and it's monitored on an ongoing basis by the Scrutiny Board, and it says CBRE provide information to the Scrutiny Board on a quarterly basis. I'm not sure who's on the Scrutiny Board, if we'll get some information on it, but it does say the Scrutiny Board provides assurance to the SRO for the fund, who's the DOF Permanent Secretary. I would propose that we invite the Permanent Secretary in to discuss this, because it is so significant in terms of amounts of money and spending power, and if he's named on this as the SRO for the fund, I think there's a whole lot of questions. And the final one, again, page 14 of the table pack, we have asked for details of any best practice benchmarking for this type of arrangement, and our question has not been answered. They've just said they've ran a procurement process. So, they haven't benchmarked it against anything else. There's nobody else doing this. So,
I think basically where we're moving towards is, because we're going back and forward, and I think we need to have an evidence session on the Northern Ireland Investment Fund, and I think part of that will help us understand our other area of interest on FTC.
Chair, just because I think there's a bit of problem with Dr. Aiken's sound, he just wanted to flag up, like the Deputy Chair, how long the contract is. It feels unusual that he's queried whether or not there are any former civil servants employed by CBRE working with this, and also advocates getting in the perm sec. So just to give that in.
Those are perfectly sensible questions to ask. I think we should ask those questions. I think we should ask. It's very important to say, it's not implying or impugning anything about this contract at this stage. We just want to find out more information, but I think it's important that we do find out information, given that the importance of understanding how this money or this funding is being used. So I think if we can get that information, but also schedule a briefing, that would be most useful. Okay. Great. Okay, members, thank you very much. The next Dalo reader response, we're going to move on fairly soon to do.
To go to Dr. Mead once we've done this one.
Okay.
First, then we'll go back.
The next one is the next Dalo reader response relates to the budget sustainability plan and the 5-year plans that we have discussed recently. The Department indicated that officials continue to develop guidance in relation to departmental 5-year plans. However, as part of that guidance, departments will be asked to provide information on their strategic direction, including any alignment to any final programme for government. Departments will be asked to agree and publish plans to align with the upcoming multi-year budget process. I suppose the question I would ask, because I asked it of the Minister, I think, in the Chamber, the now former Minister, and the Department at different times, can these 5-year plans be effectively 5-year indicative budgets, even if not signed off, and wouldn't that... I would quite like to know if the Department can tell us whether they can produce a 5-year indicative budgets. Obviously, for much of the long-term transformation that needs to happen, there needs to be long-term, but there's basically complete consensus on that across every party that we need longer-term budgeting. The Department makes the correct point that it cannot create any kind of legally binding official budget for longer than the Treasury has given the clear kind of a steer on what the executive's headroom is and baseline is going to be, but they could provide an indicative budget, put it in a different. It could be put in with a dotted line around it or with a shaded to give the public a sense of the kinds of budget allocation that would be necessary to make certain decisions. I would like us to ask whether they could do something like that. If they're doing 5-year plans, I don't know why they can't say, in order to fulfill these plans, we would need this kind of budget. So I think we should ask that question, but I'll bring others in. Ewan Tennis.
Yeah, it's just, Chair, I'm still not entirely clear in my head what these 5-year plans actually are and what they're intended to contain. So my question is, are these strategic plans that sit above the annual departmental business plans, for example, and cover policy, budget, strategic direction, or are these purely financial in that it's looking at potential for efficiency and transformation that can't be done in the immediate term? And I just, in what we've heard so far, I'm not clear which is the case.
I think that's a fair question. I think there's a difference between kind of in-house, which are almost kind of organisational annual plans, which are not about the strategic or policy direction of the department, and they are worthwhile documents, but they don't tend to be particularly incisive when it comes to strategic decisions. My question would be, if there's the 5-year departmental plans, why can't they be? So yes to Owen's question, but also can they include 5-year indicative budgets, even if they're not, clearly they won't have any legal force, but they might at least allow discussion on what a longer term budget, for example, for health transformation might look like and where it might allocate priorities. Deputy Chair, I think you wish to. Did you?
Yeah, it's a good idea and that's where we should be. But I just come back to the point I made earlier that I'm really concerned that we're not in a place to know what the 25-26 budget's even going to look like, and we don't know how much we're getting into Northern Ireland for these increased national insurance contribution. And I think until we see those things and deal with this budget process, it's very hard to see anyone building anything beyond it when we're still sitting on very short-term uncertainty.
Okay, I think that makes complete sense. We do have extremely short-term uncertainty in terms of 25. We don't yet have a signed-off budget for 25-26. We have a draft budget,
sure, yeah.
and we await that happening. Okay. Yeah, we're going to go to now back to page 18 is what I'm doing in my pack, because it is time for our oral evidence. So members, at page 166 of the meeting pack, there's a clerk's cover note, and at page 171 you have a written submission from Advice NI. It's to note the various documents, which include the business case for the Northern Mutual Bank at page 281, report on an independent survey commissioned by the Northern Mutual campaign at page 251, a Hansard transcript of the raised briefing on cooperatives and mutuals, which happened a few weeks ago. That's at page 315. The NI Charity and Community Bank accounts availability statistics on the 30th of July 2024, and that was referenced last week with NICFA. That's at page 323. So members, if you're content, Hansard will record this.
To move to this out of agenda item.
Yes,
Out of order.
do we need to move to it? I need to get agreement to move it out of order. People are happy we'll move to the oral evidence out of order. Sorry, I should have got agreement to do that. Okay. So if members are content, we will, as well as using them for today's session, we'll add them to the evidence base for the inquiry going forward. People are content. And we will welcome to our meeting, who's joining us remotely, Dr. Bridget Meehan, who's Policy Officer at Advice NI. Thank you, Dr. Meehan. We would really welcome an opening statement from you. Thanks very much for joining us, and members do indicate if you wish to ask a question. You're on mute, I'm afraid, Dr. Meehan.
Oh no, that's us.
You're not that maybe
that's
us then.
again.
We sometimes, for some reason, keep people on mute. I think that's
Okay.
you.
There we go. There we go.
Is that me? Okay.
Yes, go on ahead. Thanks.
Okay, thank you. So I did submit the written paper and some supplementary materials, the Northern Mutual business case and an independent research study. So what I'll do here is I'll just summarize some of the key points from the written paper. I work for Advice NI, and from Advice NI's point of view, our interest in this inquiry comes from our direct experience working with people experiencing financial exclusion. And so we're keen to see, find practical remedies to that. But we're also looking at the wider financial problems that exist as well. So we're taking this opportunity at this inquiry to demonstrate the wider financial problems created by being part of the global financial system, and how maybe we can try to address those problems. Because of this global financial system, vast amounts of wealth are extracted from local economies, and this comes at the expense of people, the environment, and the real economy. So here in the north, the wealth generated locally, whether it's from employee salaries or business transactions or public sector employers or charities, pensions and so on, all that money is deposited in commercial banks. And when our wealth enters the global financial system through those commercial banks. So when that happens, most of that wealth is invested outside the region and not in our region and not for our benefit. So really the priority should be about trying to prevent that wealth leaking out. So a core issue comes down to how we get access to our own wealth and how we are able to control it ourselves. And Advice and I believes that one way we can do that is through the creation of a mutual regional bank, and that's why we support the Northern Mutual campaign, which is a campaign which created with the sole purpose of establishing a mutual regional bank here in the north. And this kind of bank is distinctly different from commercial banks in their ethos and principles. I've written about it in the paper, and I won't go into any detail here, but just like a brief kind of overview of the key distinctions. A mutual is owned by its members. It's regional, so it can only operate within the region that it's licensed to operate in. It's not driven by profit, and it's ethical in its lending, especially for small businesses. And it's about focusing on financial inclusion and building trust with its members, and being able to make decisions at local levels. Now, it offers all the same kind of banking services as you would expect from a modern a modern bank. So you get your personal and business current accounts, overdrafts, business loans, debit cards, mortgages, electronic payments, foreign exchange, all of that. And of course, you would get internet and mobile banking services too. And that I mentioned in the paper the QR feature. So that's another feature that this mutual would offer, which cuts down transaction costs for businesses. Being a bank as well, it means it can avail of fractional reserve banking, which is open to all commercial banks. And that kind of creates a multiplier effect where you're able to lend out multiple times more in loans than what you actually hold in deposits. There's also, with the mutual bank, there's also a focus on reintroducing banks back into communities, which is something that is of great interest to the inquiry. So the idea would be to have physical and automated branches. And rather than having flagship buildings that are very costly, these branches could operate out of existing community facilities like a community centre or a local shop, a local credit union, a local post office, and so on. So they wouldn't incur those same kind of running costs. The automated branches are actually a kind of a halfway house between a physical branch and online banking. So an automated branch would have like what looks like a very large ATM in a secure part of a building, and a member would be able to do all their online banking through that. But if they needed to talk to a member of staff, there's a built-in video facility, like much like a Zoom video that we've got here, and they can talk to somebody directly at the bank. But that is kind of that halfway house that allows branches to go into communities and actually have access to banking services without incurring a lot of the overheads that having a flagship building would have. And of course, all of those automated and physical branches would operate under the tight security that you would get at any bank or at an ATM. The security would be there too. But I think regardless of the kind of ethos of a mutual bank and the kind of services it has, and that whole thing about trying to bring banking services back into communities, having a regional bank or mutual bank is not just about having those kind of services and more customer choice on the high street, it really is, it really can have a more profound impact on the region and goes away beyond just offering banking services. So with a mutual, you would immediately have positive social and economic impacts. A mutual will give you far more control over your own money. It would allow us not only to retain the money that's deposited in the bank, but it would then be able to use the multiplier effect, and that would increase the amount of money many times over. And that would mean then we would be able to unlock the potential of billions of locally generated pounds and invest that in our economy, in our infrastructure, in climate action, in tackling poverty, all the things that we so desperately need to do. It would also give us the resources to protect ourselves from future shocks and challenges that might come up due to the climate crisis or global events like we've seen with fluctuations in energy prices and the pandemic. And by having our own mutual regional bank, all of these opportunities will be open to us. So that's really just the summary of the paper, and that's me finished talking, so I'm happy to take questions.
Thank you very much, Dr. Meehan. It's like we don't often hear people who give their opening statement and then are candid enough to say that's me finished talking. I think that's a very you're going to have to listen to us, so thank you. Just a couple of questions from me. First of all, members obviously indicate if you want to come in. That's a really helpful, broad but concise presentation. Just on this point about wealth being, I suppose, lent out. I've got your paper's really helpful, and it has footnotes in it, which I've gone to the paper, but not the footnotes. The statistics that you use around Ulster Bank, I think it is that Ulster Bank has about 7 billion in deposits in Northern Ireland, but lends, but 7 billion deposits, but its total of lending is less than half that. Are those statistics from the bank itself?
Yeah, they're from, just let me double check.
Yeah.
They're from the Bank of England statistics. So I got them just there before I actually submitted the paper. So they're very recent.
Okay.
So it's just a snapshot to show you the kind of, the kind of money that we're talking about and the kind of wealth that we're generating here that we're missing out on.
Yeah. What would be the answer to the question, how do you generate enough of a deposit base from a consumer base that it would have to get used to the idea of a new brand and a new mutual? What would need? I mean, obviously, like marketing, even for a mutually owned, or it would have to be marketed to people. How would we go about that? I suppose that my concern would be, lots of people might like the idea of a mutually owned bank that is involved in ethical lending and lending with a purpose, rather than just maximisation of profit for a global bank. I think there are certainly people who are theoretically interested in that, but also a lot of people who we know just bank with the same people they owned a bank account with at 16 or 18, and it's just the money, and it's for the current account, the money goes in and out. They may have some savings. So how would we go about marketing it, do you think, or getting people to actually deposit money in it?
Yeah, I mean, that's really what the campaign wants to focus on as well. If we're lucky enough to get to that point, which I really do believe we can, that we're worrying about the customer base. But the study that I sent, the research study, that was just finished there in November past, that looks at some of that and highlights some of the key issues, some of the things that you mentioned there about people banking, maybe have been banking for decades with the same bank, and how would you convince them to move to another bank? And even if they like the principles of it being ethical and it being something for the region, that how do you actually still get them to move banks? Some of those issues did come up when this study was done. So in that study, there are some really good insights about maybe how we could tackle that. And I think it would have to be, there would have to be a very good marketing campaign that would go on, that would show, that would actually be coming from people that were trusted as well within local communities. So one of the things that we were doing within the campaign was to try and gather up local champions within various areas, people that are trusted within a community, that if they were vouching for the bank, then that might encourage others. So those are maybe, that's something that could be done once you would get to that point. You need to build trust in the brand, really, because at the end of the day, this is people's money. This is a very serious business. You have to make sure that people feel safe and secure with any institution where they place their money. So it's about how you build that brand and build it as a trusted brand, and that whole. We have seen from that study that there are certain demographics within our society that would actually be very interested in becoming customers, and so to target them first and then help them, maybe to help spread the word as well, that this is something that they should and could be doing. So I think it's a good question you bring up, and it's a very big issue for the campaign, and it's the same for the campaigns over in Britain, that they will have the same issue. But it's trying to build that trust and having a really solid marketing plan, something that, it would have to be a very professionally done piece of work and strategy to build it up. So, it's a longer term issue for the campaign.
Obviously, if it would have the mutual bank would still have it would have a bank, as you said, a banking license from the Bank of England. It would need to hold reserves, and it would need to meet all the rules on capital ratios and all of that. So it's also important to say that though it's not making a profit, but it is it's making a profit in the sense that it wants to earn a surplus on its investments, which is what it so it is a profit, but it's not a profit that is privately held or privately realized by.
Yeah, it's a bit like cooperatives. Nobody wants to operate any kind of enterprise that doesn't make enough money to sustain itself and have extra money then for investment and for evolving and developing. Yep. So like a cooperative, because this would be a cooperative society, it would run so that it makes a surplus, and then that surplus, it's what it does with that surplus. So the surplus doesn't go to shareholders into private pockets like that. It goes back into the bank and it goes out as dividends to the members. So that's kind of the difference. So there's nothing wrong with trying to make some money. In fact, it needs to make money. Otherwise, who's going to fund that? It needs to sustain itself. So yeah, but it operates. You mentioned too at the start, it operates under all the rules for any bank. So once it would have a Bank of England license, it would have to operate under all those rules, and they're quite rigorous.
Okay, and I suppose lastly from me, in relation to some of the technological change that people see, obviously technological changes in banking is one of the reasons why branch networks have closed, because fewer people are banking in person. Obviously, we as a committee have concerns about the closure of the branch network and what that means in terms of financial exclusion and elderly and vulnerable people, etc., and certain small businesses. But would your view be that a mutual bank should have a greater presence on the high street than for example, some of the existing big 4 or 5 here? Or would it be better just to be kind of hard-nosed about it and just say, well, we need to minimize our costs because we need to our priority is earning a surplus to, for example, whether that's invest in low carbon or poverty alleviation or the good causes that people want to invest to bank with the mutual bank to further. Would there be a view, or would you have a view that it should have a high street presence or limit its cost by not having a high street presence?
I talk about this a bit in the paper, and I sort of briefly mentioned it too in the wee summary there. So the point would be to bring those services back into communities, because I think that's important. I mean, there is an issue where, and it came up in the independent study that was done, that people are doing more of their banking online and mobile, and they rarely go into a bank. but there are times when it's like they needed to know that there was a branch there as a kind of a reassurance thing. But also, I think when things go wrong for you, you want to have some kind of personal contact. You want to make it. You want to be easily to access somebody easily and talk to them about the situation you're in and try and deal with it. So I and the campaign, we do believe that there is still a need for having physical presence in the high street, and it makes a difference to people knowing that that's there. And it's yes, there is a thing about costs. The banks aren't necessarily closing the branches because it's down to cost or because they say nobody's using them. I mean, if you take away the service, then there will be less people using banks, using branches because you have to go further to go to a branch. So it's kind of like a self-fulfilling prophecy when you start to close them, but also it's saving money. So if a bank is driven by profit, which it has to be under law, it has to seek profit, like any private enterprise, it's going to look to see how it can cut its costs as much as possible, and closing branches is one way of doing that. So that's what has been going on. We believe that you can still have a good service, physical access to branches, and you can do that at a low cost. I did kind of mention it briefly how you wouldn't have to have necessarily its own flagship building, but you could use a community facility, have a secure area there, and also having the automated branches, which, like as I said, that's like a large ATM where you can do all the online branches, but you could or online services, but you would have video access to a staff member, and you could even have a couple of clinics a week along with that. So have another secure room, a private area where a staff member would come once or twice a week. So you would have a kind of a halfway house between the full physical branch and it just being completely online, and that again would reduce costs. So that's how we would see it maybe happening, and that would really integrate it into the community as well, because you would have it in community facilities that people use all the time.
Okay, the final question for me: what has to happen legally for this to happen? What piece of legislation needs to be passed? Is there existing legislation provision for a mutual bank to exist?
Yeah, it came into law in 2016 in Britain and here in 2018. So legally, there's nothing to stop us from doing this. I think when we talked to the Department for Economy, some of the officials there were some small issues that maybe further down the line, once the bank would be in operation, that they would have to look at. But right now, to establish one, the legislation exists, and also the only thing you really need is to have the license from the Bank of England, which is a very formal process and requires certain things to be in place before that even happens.
Okay, so this is the Financial Services Act 2012, Mutual Societies Order 2018. Okay, that's helpful. Would your view be that it should be, because obviously it's reserved, so this would be, okay, well, I think I've established that in my head. That's fine. We're going to move on to members' questions. Diane Forsyth, Deputy
Thank you, Chair, and thanks very much, Dr. Meehan, for being here and for providing such a comprehensive piece of written evidence to the committee. There's a lot of really interesting and useful statistics, both for this inquiry and for just other things, especially with regard to my constituency. And I just want to thank you and your team across Advice NI. I represent South Down, and in particular the Newry Morning Down team are really, really helpful and good to work with on the ground.
Okay.
I just wanted to ask you if you could detail what you feel from being the organisation dealing most first-hand right across the region, what the current gaps are more in rural areas versus the more urban areas?
You mean gaps in banking services and what's available?
Yeah, and the impact that has.
Well, the gaps are are clearly in the rural areas, but they're also very much in the urban areas. So it's, to me, it's like you'll find that even the more deprived areas and urban areas have fewer ATMs, or have ATMs where you have to pay to use them, and some of them don't even have branches at all. So there doesn't seem to be any discrimination, I don't think, between rural and urban, and with regard to the way branches and ATMs have been closing. I think it's been right across the board. I think the problem is greater for rural areas because in an urban area, you might be able to get to another, to a service through a bus route. It mightn't be that far away, but in a rural area, you could be talking quite a distance and need to get a car to get there. So I think that's why it hits rural areas more. But the urban areas are equally being deprived, and there's just basically financial deserts almost in these areas. And I put some of the information into the paper as well. But you can see the difference it has on people being financially excluded like that. A lot of people, and especially they've found here, that people do like to use cash, but there's a push overall to try and cut down the amount of cash that's being used and get people to use more money, shift money electronically. I think we should resist that. And a lot of people do budget better when they're using cash, and so when they're forced to pay for things electronically, that is harder for them when you're on a small budget. So we found things like that in the advice sector, and how people are hit by that. So yeah, I mean, those are kind of just some general points. I don't know if you want me to elaborate on anything in particular.
Thank you very much. And again, it's just even the way that we use our banking services across Northern Ireland. We had evidence before in terms of the banking hubs being set up, and one of my constituency in Kilkeel was operating long enough to get some data out of it, and they find that compared to mainland GB here in Northern Ireland, our businesses significantly more were using the banking hub. And I think it just reflects to the point that you make. I think that there really is a drive to be using cash, and people want to have that access. In particular, I find it in rural areas where you do have the additional cost of travel to access your different banking services. And I just wanted to ask you around, you talked a little bit about the model and the clinic set up for the this proposed bank. Do you see that in mirroring the way that the banking hubs are operating within different pockets of Northern Ireland? Just as you were explaining it, it very much sounded to me like the way the banking hubs operate. And if this was to be brought forward, perhaps it's something that would link in with those banking hubs as somewhere to partner up with and sit within.
Yeah, for sure. I mean, the banking hub, I suppose, it is like the banks getting clubbing together and trying to reduce costs, but try and bring some services into an area. I did hear an anecdote from one of those hubs, and there was a printer that didn't even work or something. So it's like, I'm not sure, how they're working for people. That was just one anecdote. I'm not, it may not be reflective of the whole thing, but that kind of idea, there would be no reason why, if there were a mutual bank, that it couldn't be having that hub kind of set up as well. But that's almost like the idea it would have anyway, for having its own branch network, the automated and physical branches, that they would be set up in places that would be in the heart of the community, in facilities that are already there, rather than having to create a whole new structure or pay for some really expensive real estate in the middle of town. So it probably would work or complement it quite well.
I think so.
But I wanted to say too, just on the when you talked about the businesses, I mean, businesses and using cash, and people not using cash and using cards. There's so many businesses talk about the cost of those transactions for them, that it's easy and convenient for the customer, but that has taken a huge amount of money away from local businesses, small businesses that it just eats into their profit. And that's why the QR code idea that you wouldn't pay if you were in the customer and the business were in the mutual, both members of it, that they wouldn't even pay for the transaction if they paid through their card. But when you pay by card as well, that's another way of money being extracted from the region, because those providers like MasterCard, they take a small percentage of that, and that's that's money that never gets to stay in the local area. So it's all these different ways that, while it looks convenient, it's actually just leaking money out of the region all the time and into that global system where it's just used for investments or all sorts of kind of financial activity that is not benefiting here, but probably isn't benefiting anybody except the private investors.
I think over the past 2 weeks as well, we just were really seeing, I know in my constituency after the storm, whenever we've been cut off with power, with broadband, with phone connections, people haven't been able to actually access their money. So just the importance of keeping cash in the community and people being able to pay for things and get about their day-to-day business has been highlighted once again, especially in rural areas where you have a lot of small businesses, and when the broadband's down, it's the only option they have. No, thank you very much for that. Thanks, Chair.
Okay, Jerry Jerry Carroll.
Carl, Chair, thanks. Thanks, Bridget, for that. Very useful paper, and thanks to Advice NI for their work and helping our office and over the years. So thanks for that. In terms of the ILGOS, as obviously was mentioned in the paper, enough from sure how familiar you are with how it works. I'm not overly. In terms of the pension fund, I'm curious. I mean, they've got a £10 billion value. I don't know if you've done any research or you're aware of any research that says, a portion of that could be used for borrowing, for loans, because obviously I'm presuming it's quite stable, given that it's a pension fund, and pension funds tend to invest in various things, some ethical, some not. So are you aware that whether NILGOS is able to, people are able to avail of loans from NILGOS, or is that not possible, or would that require a piece of legislation? I'm curious if you have any information on that.
Yeah, it would be more like, rather than them giving out a loan, NILGOS would invest the way they invest in other, I suppose, ventures and opportunities. So that's what they do anyway. They invest the money and they make sure that the investments are secure and longer term and more stable, and less risky. And so the mutual bank would simply be another investment, but it would have a double advantage, as in that would be an investment in the region as well. So they would be, and part of their ethos is to have ethical investments and to do what's best for the region. So investing in a bank like this would be something that would be in their own kind of set of principles. And I don't think there's anything to stop them, or I don't believe there's any legislation that they would need to be able to make an investment in something like this any more than they make investments in other things. And just to say too that the Welsh have a campaign, Bank Cambria, which is their version of the Northern Mutual, and they are moving on at a pace with that campaign, and they have the support of the Welsh Assembly. But it's the Welsh Pension Partnership there that is looking to invest in them. So that partnership there, that's the kind of public pensions there, are looking to see, are going to be investing in that campaign. So I can't see why NILGOS or any other public pension here wouldn't be able to do the same thing.
Thanks, Bridget. That's really useful. Maybe through the chair, if we can ask for a breakdown of what NILGOS are already investing in, if we haven't got that already, I think that would be useful. Just two other questions, Bridget, from me. You talked about the Ulster Bank, 3.4 billion sort of invested outside the north. Like, do you have any idea roughly? I mean, I'm not asking for a pound by pound breakdown, but roughly what that is invested in. Like, does that go on the stock market? Is that sort of what I would say wasted money if it's, you know, chasing after gambling in terms of stock market? It's just a, you know, a rigged, wasted system. Is it on that? Do you have any idea where that goes? And also, do you have a rough? I appreciate those Ulster Bank figures are up to date, but do you have any rough figures for the other banks in terms of the North and much they're investing outside here that would be useful?
Yeah, the other investment figure, I don't have any of the other banks offhand. I just took them, not picking on them. I bank with them myself. But they, you can get easy access to all of that data, and I can send a link or several links that people can have a look themselves and see what the latest figures are. But where is this money invested? Well, I know NatWest that are associated with Ulster Bank, or kind of, I suppose, are the overarching corporation there. They do invest in extractive industries. Probably, if you were looking at where ethical investments go, wouldn't be the most ethical. But they, you know, this money, once it gets into the global financial market, it can go really anywhere that those investors and venture capitalists want it to go. And you know, I don't really want to start naming specific banks and where they might invest or not invest. But once it goes into that global financial system, the first thing is that we don't have any control over it, and we certainly won't be getting any benefit from it. But then we don't have any say in where it should be invested. So they are allowed to just invest it wherever they choose. And they won't care about the environment. They won't care about if they destroy communities. It just doesn't matter. It's about how they can make the fastest amount of money. That's really what it's about. It is sort of like a gambling den, the global financial system. And unfortunately, even with the crash in 2008, it wasn't really, that did not reel in that behavior that much. It's really back to what it was with very little checks and balances there. So we're all helping fuel that. And that is driving poverty worldwide and locally. It's driving climate change. It's doing all the things that really don't help people and communities or the planet. And so there's a really big political reason why we should have more of these regional mutual banks.
Thank you. Just final question, just short. If we get a breakdown of those investment figures for fossil fuel industry and the rest, that would be really useful. And beyond what you mentioned, and obviously Barclays have faced criticism for their connections with Israel. I'm not asking you to give your necessarily view on sort of certain unethical investments, but is there a list of those banks and the sort of investments that they're pursuing that are sort of have been questioned as unethical, and if that's available, I think it would be useful for the committee to get set up. Thanks.
Right. Jerry, are you saying you want a list of, what are you saying you want a list of? Banks?
I'm just saying, yeah, well, so two things. I mean, Bridget has said that the investment in the fossil fuel industry, which I think is really important and urgent. And also I'm asking the question whether there exists or whether she's aware of any unethical investments of the banks here. So there's a question of obviously connection to Israel that others would say is unethical, but it's much wider than that. So I don't know if that exists, a breakdown of those figures, but that's what I'm inquiring, Chair.
I would say a couple of things. First of all, the comments about the ethical or otherwise activities of, there's specific banks, and then there's kind of global capital writ large. I'm not saying that I agree with the actions of individual banks or investment decisions. There's probably a lot of what has been said that is correct and I would agree with, but we don't have the capacity to go and kind of hunt, nor is it within the realms of this particular committee inquiry. I think what I would say is if there are any specific bits of information about particularly locally based and UK banks here where there are specific concerns, I would happily receive that. So if Dr. Meehan, if there is anything specific you have that you want to flag to us, I'm happy to receive that, and we can then discuss it in the appropriate
No, Chair,
forum.
it's ethical investment is the question, so I think it's a fair question to try
It's
and.
definitely the fair question. That's why we're taking evidence, Chair. I'm not saying it's not a fair question. What I'm saying is we don't really have the capacity to go and investigate every single investment made by every single bank, is the point I'm making. But in any case.
No, but there are summaries though. There are summaries of the kind of investments and just general headings and the general amounts of money maybe that are spent by various banks. Because we only have like 5 or 6 big banks. It's not like we have loads of them. So I can try and source some of that. I know I have some of that, but I'll try and source some links and some documents and get them sent on to the committee.
Thanks,
fine.
Bridget. Thank you.
No bother.
Receive that. That's fine. Owen Tennyson.
Thank you, Chair. And just before I ask my question, I think to be fair to Jerry, actually, on this point, if one of the reasons why we're talking about a mutual bank model as being beneficial is the fact that they can engage in ethical lending, I think the ethics of banks that operate
I
in
didn't say it
Northern
wasn't,
Ireland.
Owen. I didn't say it wasn't. I said this committee does not have time to go and look at every single global finance institution.
I'm not
It is
thinking-
sorry, through the chair. It is entirely proper that we get information on any relevant information on the ethical lending activities of banks. But please don't misquote me.
I'm not singling you out, Chair. It wasn't you who objected, in fairness. So I don't know why you're being so prickly.
I'm not-
It's a legitimate.
Sorry.
No, you
Sorry.
are, Chair. It's a legitimate.
Sorry.
It's a legitimate
Sorry.
point for me to raise. That I think
Owen.
that looking at ethics is appropriate. That's all I said.
Owen, I didn't say it wasn't.
I didn't say you did.
Yes, you said that we were. Can I just be clear? It is entirely proper for Dr. Meehan to send us information on ethical lending practices that pertain to banks operating in Northern Ireland, and I would welcome that. I made a point about the resource and focus of our inquiry. Okay, can we move on?
Yes, we can, Chair. May I ask my question to the
Please
witness?
do.
Dr. Meehan, thank you for that evidence, and can I add my thanks as well for the important work that Advice NI does, because, like others, my constituency office has relied heavily on the expertise that you provide. The briefing that you provided was really useful in terms of setting out, I think, the advantages of a mutual bank model, and is really persuasive. Could I just ask, though, are there any limitations that you foresee in the operation of a mutual bank model in Northern Ireland? Are there any problems that you think might arise that we need to be aware of or need to try and overcome?
Let me think. I think it's like any enterprise. It will have that you're trying to start. It's going to have all those same sort of risks. The model that would be used for this is the one that has been used in Britain, and that has been developed by the CSBA, the Community Savings Bank Association. And what they have done is they have put together a package where they have reduced the potential risks as much as possible. And that whole thing of saying that there needs to be about 20 million there to get started, you don't actually need that for the Bank of England. They don't require that, but that was a figure put there by the CSBA to have. That would be capital reserve. That wouldn't even be money that would ever be lent out or used in the operation of the bank. That would be put in the bank at the Bank of England and left there as capital reserve for any potential failure, which you would hope wouldn't happen, but any kind of shocks or any bad debts that would occur. So that's one way of mitigating that kind of risk, any financial risk. The rigor that you have to go through the banking licensing process, you're dealing with the Bank of England there. They are not going to just let anybody have a license. And so by the time you get to a point where you can open the doors and you have a license, you've already been scrutinized, and there's already been a certain level of, I suppose, security given to the Bank of England that this is viable and that this can work. We've done with that business case, there's been an initial piece of work done, but it's quite at a high level. But we would like to do a more in-depth study of the financial element of it, just to prepare exactly what the market would look like, what share of the market you would need, how many customers you would need in the first year, the second year, and so on, and to plan that ahead for about 5 years or so. The business case does that to a certain extent, but it would need a bit of a more in-depth study done of that. But even, I mean, we now know through the business case that the bank is viable with the population size we have here, and if it only had a 5 to 6% share of the current accounts and the business accounts that exist already, so it's quite a small share of the market there that would make the bank viable. And then it would come down to having the professional level of staff, management and staff that you would need to run the bank, and then having a very conscientious board that would be elected by the membership to hold the management to account and make sure that the bank was actually adhering to its own principles and adhering to all the regulations that are required from a bank. So I think putting all those checks and balances in place, belt and braces really, would be how you would try to reduce the risk of a startup like this. It's not a trivial undertaking by any means, but I think we feel kind of, because there's a whole movement. It's not just here in the north, a few people deciding that we want to have a bank, plucking it out of thin air. This is part of a movement. There is the model already there. There are campaigns, several campaigns, and some of them are very close to getting a license. And I think that gives a certain level of confidence that it can be done. And I think because we're lagging behind these other campaigns, we'll see very soon some of these banks actually beginning to start, to open. And that again gives more confidence that yes, it can be done. It's worth pointing out too that a mutual bank might be a new thing for us here, even new in Britain or anywhere else in Ireland, but it's actually not new in most other places in the world. It's sort of different here in Britain and Ireland that we don't have one of these things. So they do work. They're sustainable, and they serve their regions well in other places. So I can't see why, with all the checks and balances that we would have in mind for this bank, that we wouldn't be able to do the same. So I hope that answers the question.
That's really comprehensive, Dr. Meehan. Thank you. And just one other question from me is, one of the benefits associated with the mutual model is that it can prioritise lending to small businesses that are often underserved by commercial banks. Given that this looks like a relatively long-term aspiration in terms of having a mutual bank set up, is there anything that government should be doing in the interim to ensure that commercial banks better serve those customers from Advice NI's perspective?
We wouldn't normally have a lot to do with business customers. Maybe business debt is where we would come across it. And actually, it's not even loans. I suppose this is the one thing I could say is it's not even loans that businesses generally need. It's maybe a very small amount of cash for a very small amount of time to get over a payment that's coming in or a lean time. They might just need an extension of an overdraft. They might just need a bit of extra cash at a certain point of time, and they don't want the actual responsibility of having a very large loan taken out over a period of time. So the flexibility of being able to offer them to keep their cash flow going is actually more important to a small business than being able to get a loan. So if the banks were able to do something like that, although I don't know if they can or they would, because again, that may not be that profitable. And it's profit at the end of the day. They are duty bound to think about profit first, their shareholders first. So I don't know if they can be flexible in the way small businesses need them to be. But I would say that it's about the cash flow and about being able to get money to them for short periods of time. That doesn't mean a 5-year loan. That kind of thing is something that could be useful to small businesses.
Thank you, Dr. Meehan. That's really useful. And Chair, just as a hand back, I would ask you to reflect because I was expressing, I believe, a legitimate view about something that should be within the scope of this inquiry. And I respect your role as chair, but it's not for you to muzzle politicians on this committee expressing those views. It was not intended as a criticism of you, chair, to be clear. And I would ask you to reflect on that.
Well, I've reflected. I did not muzzle you, but you put your points in the record, and I don't think I have, in my time as chair of this committee, I don't think I've muzzled anybody at any time. In fact, I think I've probably been exactly the opposite. I think I clarified my own position, which I felt wasn't entirely being reflected, but that's fine. You put your views in the record, and you are, Owen, like all members, always entitled to do that. One final question from me, Dr. Meehan, is in relation to mutuals. Some people will think of some of the continental examples and the credit union, obviously, which is different because it's not a bank, it doesn't have a banking license. But in relation to some of the mutuals that have existed in the UK, so the building societies, what is different between a building society and a mutual bank? My rough understanding is that a building society does not necessarily have an ethical. What's different between Northern Mutual that you're campaigning for and advocating and a building society is that a building society is not owned it's not a bank, but it's mutually owned, but it doesn't necessarily have an ethical purpose. Is that about right, or is there anything else I've missed?
There's a couple of wee things there. So the mutuals that have existed, that there has been in Britain, mostly through building societies, they've never been actual mutual banks. There's never been one of those. Even the cooperative bank was never. It was a private company that had the cooperative front, if you like, and was operating in that way. But you could not, until that legislation of 2016 and then here 2018 came into force, you couldn't actually have a bank set up as a mutual society, as a cooperative society. So that was never available before. And that's really why this campaign and the movement over in Britain have come into play, because taking advantage of that new legislation means that now you can have actual proper mutual or cooperative banks. But the difference with the building society is, I mean, some of them do have ethical principles that they operate by, but they're set up to, their prime purpose is about mortgage lending. So that's really I suppose, their primary business. And then because they don't strictly have, they're not banks and they don't strictly have a banking license, they are restricted in certain things that banks can do. So they're limited in how much lending they can do to businesses. Not all of them can provide current accounts. Not all of them do personal loans. So it's really, the mortgage business is what they're mostly in. Now, it wouldn't mean that you couldn't take a building society and bring it through this process and it then becomes a mutual bank. That actually would be a shortcut to having a bank. That's sort of the track that they're on in Wales. And that would be, if we could get a partner like that here, it would actually be excellent, because they already are known by the Bank of England in a sense. They're already under a lot of financial regulations anyway, the FCA. And so they can be, it's almost like they get an upgrade to what they're already licensed to do. And it would be a shorter process. So, there's no reason why a building society couldn't sort of morph into an actual mutual bank.
Okay, good. Thank you very much. No one else has indicated they wish to ask a question. So thank you, Dr. Meehan, that's really useful. I think there's a couple of, unfortunately we've given you a couple of bits of homework / added things, including around some of the ethical investments we talked about. And I think there was something else which I've now forgotten about, but hopefully I'm sure the Clerk staff will have made a note and we'll be able to liaise with you on that. But thank you very much for your time. Thanks for providing the briefing note and for giving
No problem.
Cheers, thank you.
Thank you.
We may
Thank
be asking
you.
you for more, unfortunately. But
No.
thanks very much for your time.
No problem. Thanks a lot.
Thank
Bye.
you.
Bye.
Okay, members, I think we are, if people are content, we have a couple of specific bits we may get from our witness. The next agenda item, I think, is agenda item 6, which is an SL1 on rates relief. That is the SL1 Rate Relief Amendment Regulations, Northern Ireland 2025. So if you go to page 17 of the table pack, there is a revised cover note starting at page 133 of the main meeting pack for relevant correspondence. Page 17 of the table pack has a revised Clark's cover note, and starting at page 133 of the main meeting pack, there is relevant correspondence from the department. This revised note gives greater information regarding the position in GB at the top of page 18 of the table pack. Members, the department proposes to make a statutory rule under powers conferred by Article 30 of the Rates NI Order 1977, making consequential adjustments to the regulations for the rate rebate. The rate rebate scheme, the rate relief regulations Northern Ireland 2017 to ensure continued compatibility of the scheme with UC migration. The rule will enable the scheme to use data from the UC means test rather than potential recipients having to undertake an additional means test. Members will recall from a recent oral briefing with the Director of Rating Policy that this rule is one of 3 proposed rules coming to the committee in the coming weeks. The Hansard transcript of this briefing is included at page 136 of the meeting pack. There are no new policy measures being implemented with this draft rule, which is subject to negative resolution. Full details can be found in correspondence from the department. Finally, at page 20 of the table pack, members will see an email from the department which confirms that the amendments detailed in this SL1 are compliant with section 24 of the NI Act, including the Article 2 rights referred to in section 24(1)(a). Members, in relation to this SR, members, are you content with the proposed statutory rule under the powers conferred by Article 30A of the Rates NI Order 1977, making consequential adjustments to the principal regulations for the rate rebate scheme, the rate relief regulations Northern Ireland 2027, to ensure continued compatibility of the scheme with universal credit migration, or does anybody require any further information? No? Members are content? We are all content. Okay. Now the next agenda item is slightly more complicated. It relates to the recognition of professional qualifications and implementation of international recognition agreement, amendment, extension to Switzerland, etc. Regulations Northern Ireland 2025. So members, the Examiner Statute, we talked about this in a previous session. The Examiner Statutory Rules has identified a drafting error which will require the SR to be redrafted and relayed. As a result, the department has asked that the SR is withdrawn from the agenda. So, I don't know if it's necessary that we go into the specific drafting error. It may be one for academic interest, but except to say, members, I'm happy to have a discussion on it, but if not, members content that we agree to the department's request that the SR is removed from the agenda for today's meeting.
Right. Thank you.
Okay. The next we've done. I think the next agenda item is correspondence. So item 9.1 is the Windsor Framework Democratic Scrutiny Committee Regulation EU 2024-3110 of the European Parliament and Council 27th November 2024, laying down harmonised rules for the marketing of construction products and repealing Regulation EU number 305/2011. At page 332 of the meeting pack, members will find a copy of the Windsor Framework Democratic Scrutiny Committee report, which was published on the 23rd of January and sets out the conclusions of an inquiry by that committee into a published Replacement EU Act, which was Regulation EU Act Regulations 2024-31110. The committee has concluded that this Replacement EU Act would not have a significant impact specific to everyday life of communities in Northern Ireland in a way that is liable to persist. This report has been copied to this committee for information. So members, this is to note unless anybody wishes to make a comment. Item 9.2 is the Brussels report, which is from the Executive Office representation in Brussels, and it focuses on issues relating to what's happening in Brussels and the new European Parliament Commission. So that's to note, members. Unless anybody wishes to raise. The next agenda item is the pivotal review of the first year anniversary of the restored Northern Ireland Executive, which is at page 389 of the pack, and they highlight progress in various areas. Members can note that. if they wish. The next agenda item, members, is 9.4, which is correspondence from an individual, which is at page 405 of the meeting pack. So, members, you will find further correspondence from an individual regarding a complaint about governance within the Department of Finance. At the committee's first meeting in February 24, members agreed a committee approach to dealing with correspondence that is not linked to strategic priorities or statutory duties. As such, the committee informed the individual that the committee does not become involved in individual cases and that they should contact one of their constituency MLAs. The individual has indicated that they have done so and reiterated their accusations. So, members, this is really one to note, and not to be persistent about it, but generally I think we don't deal with individual cases, but I will go into the Deputy Chair.
Yeah, thank you. I don't know about anybody else, but I've noticed an increase in these in other committees as well. People writing directly into the to the committees, and I fully support the approach that we took in February and the capability of our very able team with the clerks to bounce those back. But I just have noticed an increase in them. People writing into committees. So just
Jerry Carroll, yeah, okay. Jerry Carroll.
Yeah, Chair, just I've had some limited further correspondence with the person just after it was raised, I think 2 weeks ago in the committee. No detail of what is being alleged, and I might follow up with that individual. And if I get evidence of any malpractice or alleged otherwise, I might forward to the committee, but I haven't received that yet. But I have had some further correspondence with that individual, just for the record.
Okay.
Chair, it might also be worth, when we go back to the correspondent, seeing if potentially the NIPSO is the next step. We don't really have clarity on what process has been used.
I think it's important that we don't, as a committee, get down the role. I mean, I think if there is a signposting responsibility to say to this, to factually flag to this person that NIPSO has this role, I think that's a reasonable thing for us to do. That's purely factual signposting. I'm not sure it's for us to begin investigations.
No, definitely not.
Okay.
People are content with that. The next agenda item relates to the NI Youth Assembly January newsletter. The committee has been sent a copy of the Youth Assembly's January newsletter, which details its engagement with departmental consultations and assembly committees, as well as its own committees and evidence sessions. So, members, that's no, but I think Dan Forsyth wishes to.
Yeah, thank you, Chair. And I've had some engagement with the Assembly the previous term, and this one, they were in at the PAC this week. I just wondered, have we got it on our agenda in this committee to plan any activities or engage with them or bring them in? I think that it would be very, very valuable.
Chair, we have them poised for the marriage bill we're expecting. They have been poised for some time now, Chair. But the Youth Assembly manager and I are in regular contact. Obviously, that bill with the provision of creating the age 18 absolute limit, removing the 16 with parental approval, is something the Youth Assembly has particular interest in. So we've been communicating early on to get them ready. It's just we haven't had the bill in the timescale we thought we might, but we're ready to do that.
No problem. Okay. The next agenda item is our draft forward work programme. So the clerk is going to give us an update.
So, Chair, we now have got to the point with the LCM on property digital assets bill where we can start to actually get into the whole initiation of the LCM process on a localised level. So the department has indicated they now stand ready to bring forward their memorandum. Once the department brings forward their memorandum, the committee has 15 working days to produce its report and publish it. The department would then, not earlier than 5 days after that, bring forward the motion on the legislative consent. So where we stand with our report is that is largely completed. The committee has taken evidence on a couple of occasions. We've sought further information through correspondence with the department. That is now all sitting ready. So what our plan would be is we bring it to next week's meeting for members to approve, and that way everybody can hit the timescales that are now going to be live as soon as we get the memorandum. So the memorandum just has to be laid, doesn't have to go through a plenary session, whereas the motion when it comes will be a full debate on the issues. The other reminder that I want to issue to members is just that next week on the 19th, we've agreed to meet at 1. Then the other thing was just to remind members again, for the 19th of March, when we have the forum for the other finance committees, that will largely be a full day thing. So we'll put out a more detailed agenda in due course, but I just wanted to flag it up again for members to kind of start to consider their diaries for the 19th. We already have commitment from, I think we have 3 Welsh members coming. We just don't quite know how many Scots. But yeah, we just wanted to make sure members had that pinned down in their diary.
Sure. Okay. So members, if people are content, we will publish, as always, the forward work programme on the committee pages. Actually, any other businesses I wish to raise? Any other business?
Mr. Free.
Paul Free.
Yes, thank you, Chair. And we're now into February and we still have no primary legislation on the forward work programme. So I suppose I would ask for an update on the legislation that we're waiting for. We are coming up to a point where the Assembly will have to decide to refresh and extend the registration of deaths and stillbirths.
Well, I think I agree with that. I think we should get that refreshed, given we also talked earlier on about the fiscal council situation and the sore use of the budget bill and the black box. So I think that is urgent. I think we have a template table which was produced. So we should ask the department to fill that up. To fill that out, I think, with extreme haste. Lastly, I think it's just for me to say, as always, we are in these committees, we deal sometimes robustly, but to Mr. Tennyson's point, he asked me to reflect, and I would just reiterate, if at any time people feel that I'm being in any way discourteous, I'm perfectly happy to hear that, and no discourtesy is ever meant. I can be, when I'm direct, it's not because I'm in any way seeking to infringe anybody's right to speak. I was making my point robustly, and I think Owen Tennyson made his point, and as he was entitled to do, and always does, with extreme, with very, with I'm looking for the right praiseful, pugnacious. It may well be that indeed. So, and sometimes there will be, I think sometimes there will be fallings out of legitimate policy issues, but this shouldn't be one of them. So I hope that the member understands that I would never seek to curtail his contributions to this committee. I might seek to curtail his contributions to other debates in plenary, perhaps, but not in this context where we're all doing a job of scrutiny collectively. I don't have anything else other than to remind members, in a few weeks' time, I will be myself taking a few weeks off paternity leave, which will dovetail around at the time of the Finance Committee forum. Just to flag that, I will give more details near the time. But there is one agenda item that I need, one item of any other business. We don't have a cake, but Nicola Brogan, our colleague, is departing, as the order paper for next Monday indicates. So Nicola is going to a better place, certainly a less. Not there's anywhere better than the Finance Committee. But I just wanted to thank Nicola for working on with us on the Finance Committee, and wish her well in terms of what she does going forward. Nicola, I don't know if you don't have to. I haven't asked you to prepare a few words, but we will miss you. Thanks for.
No, thank you, Chair, and I'm certainly going to a more familiar place filled with potholes for West Tyrone. But no, thank you, Chair, and all the committee members. I've really enjoyed being on the Finance Committee, and I've certainly learned a lot from each of you, and to the clerk team as well. You've done a great job, and I do appreciate all your help throughout the year. So thank you, and thanks for your wishes, Chair.
No problem. Thank you very much. If there's no other business, the date, time and place of the next meeting is the 12th of February at the earlier time of 1 p.m. Here in the Senate chamber. And I put the question, the committee does now adjourn. The committee is now adjourned.
Senate chamber. Sound